Today's top stories at NBR. A2 Milk share price sinks, Rocket Lab launches on the NASDAQ, construction staff shortages are the worst they've ever been, and there's more coming right up. Kia ora and welcome to NBR Today, a wrap of the day's top business stories from the authority in New Zealand business news since 1970, nbr.co.nz. It's Thursday, August 26th. I'm Paul Brennan. Thanks so much for joining us. The National Party is concerned that it's unclear whether firms can sack workers who refuse to be vaccinated against COVID-19. Workplace Relations and Safety Minister Michael Wood appeared before Parliament's Education and Workforce Select Committee this morning and faced questions on what legal rights employers had when it came to dealing with unvaccinated workers. Wood said the government did have a health order in place which required workers at the border and MIQ facilities to be vaccinated, but there were no plans to require workers in other workplaces to be vaccinated. Shares in A2 Milk sank as much as 12.7% this morning after the infant formula marketer reported challenging conditions in its key China market. By lunchtime, the stock had recovered slightly to trade down 9% at $6.51, but the reaction indicated investor surprise at the weak outlook despite the company's well-flagged financial results. Net profit for the year to June came in at $80.7 million, down from $385.8 million the previous year. Revenue dropped 30% to $1.2 billion. Chief Executive David Bortolussi said the difficulties in China would not deflect A2 from its focus on that market. Air New Zealand boss Greg Foran does not believe the TRANS-TASMAN bubble will ever reopen in its previous form, saying vaccinations and pre-departure and post-arrival testing will become the norm. The national carrier has today announced a net after-tax loss of $289 million, some 36% better than last year's $454 million loss, although it finds itself amid another cash-draining COVID-related lockdown. Ongoing border restrictions saw operating revenue decline 48% to $2.5 billion as international flying was significantly reduced, with capacity down 55% on the prior year, although cargo flying revenue grew by 71% compared with the prior year thanks to air freight support schemes. Rocket Lab has successfully launched on the US-based NASDAQ stock exchange as of 1:30 this morning New Zealand time, with the stock price closing at US $10.43 today. The New Zealand and US-based launch and space systems company, founded by Peter Beck in 2006, was taken to market via a merger with a special acquisition company called Vector Acquisition. It will have the ticker RKLB. Peter Beck joined the NBR's Will Mace.
It's obviously quite a volatile time within the space markets, especially. There's a number of other SPACs and space companies out there that kind of push the stock price around a little bit. But look, I mean, we're trying to build a generational leader in the space industry and space companies. So we're in this for the long haul. So I wouldn't let 8 hours of trading, filter that too much. This is a long road for us from here onwards.
Rocket Lab founder Peter Beck with the NBR's Will Mace there. Staff shortages are the worst they've ever been, with more than half of firms actively looking for on-site staff. BDO's latest report on the construction sector reveals almost 100% of firms say they are at the point where they will have to pass higher wage and spiking materials costs onto their clients. A shortage of skilled staff was a standout issue in 2019, and although the problem eased after the 2020 lockdown, it had rebounded as one of the greatest challenges facing the sector, BDO said. The problem was amplified by the cyclic nature of the sector and the current high demand for new housing and commercial buildings. A third of businesses with a turnover over $100 million said immigration restrictions were having a significant impact. Tourism Holdings has spent a difficult year asking whether the COVID pandemic is a fatal existential threat to its very survival, and has concluded that it does have a future, although a changed one, with an uncertain path through 2022. The company, the largest provider and manufacturer of RVs for rent across Australasia and operator of Kiwi Experience and the Discover Waitomo Group, as well as motorhome concerns in the UK and US, recorded a 10% drop in revenue in the year to June 30 of $359 million, a $14.5 million loss, down 153% from last year's $27.4 million profit. and a 64% slump in EBITDA to $40.4 million. It had forecast a net loss at the lower end of its previous guidance of $14 million to $18 million. The company is forecasting another loss in 2022, although not the quantum at this point, but says analyst forecasts made this year are too optimistic. The full details of those stories and more are at nbr.co.nz right now. Tomorrow at NBR, prospective and existing retail investors flock to online platforms and a stock exchange targeting small and medium-sized businesses worth between 6 and 60 million. I'm Paul Brennan. I look forward to being with you again tomorrow from around lunchtime for the morning's NBR trending stories. Then same time, same place, right here from 5:30 and right through the weekend for another NBR This Week.